Chapter 4-5A, now we're going to be taking a look at our journal transactions from 4A and then posting them to the journal ledger. So keep in mind from your reading you have learned that posting is the act of copying information from the general journal into the specific ledger accounts for each account affected. So on the left-hand side of the screen are my journal entries, and on the right-hand side are my ledgers. So we're not going to be able to go through every single one of them, but we'll get through several to where hopefully you'll understand the process. So I'm going to look at my first transaction where I debited cash. So I'm just copying that over. So whatever I did on the journal, I'm going to do the same thing on the ledger. So I'm taking my cash that I debited for $12,000. I'm going over here to my cash account on the ledger, putting my date, the $12,000 debit, and I'm creating and calculating my new balance. So this is kind of like a T account as well. Now the difference in the ledger accounts that are different from the T accounts is that we calculate an ongoing balance. The balance is always up to date after every transaction, whereas a T account we put in balanced. So this account has a zero balance in it. There's nothing in it before January 1st. So if I debit it for $12,000, my new balance is going to be a debit of $12,000. Also keep in mind for the cash account that it increases with a debit and decreases with a credit. So anytime I debit it, I'm going to add, and anytime I credit it, I'm going to subtract it from the previous balance. So I put the date, $12,000 debit, find my new balance, and it came from J1. My post reference tells me where I can find this transaction in my journal. So I go back over here to my journal and it's page 1. So J stands for journal and 1 is the page number. Then the last step is I take my account number from the ledger, which is 101, and I put it back in my post reference column for my cash account on the journal, and that tells me that I have posted that transaction. Okay, then you just go in order. So now my next one is I credited capital for $12,000. So I'm going to go over here and I'm going to scroll until I find my capital account, and here it is. So I put in the year, the month, and the day, and I credited it for $12,000. Again, this didn't have a beginning balance, so its new balance is a $12,000 credit. Now I will never have a balance in the debit column here because the normal balance in my capital account is a credit. So anytime I credit this account, I'm going to add, and if I would ever to debit this account, I would subtract it from my balance. But the ending balances in your ledger account should always be on the normal balance side. So it came from J1, and I'm going to take my 311 account number and put it back in the post reference of the journal. Okay, then I debited my rent expense account for $750. So I'm going to scroll down and find my rent expense account. So I put in my date, the second, $750 debit. My new balance is $750 debit because there was nothing there before. And also rent expense increases with the debit. Its normal balance is a debit. So anytime I debit this account, I'm going to add. If I ever credit this account, I'm going to subtract. But my ongoing balance should always be on the normal balance side, which is the debit side. It came from journal page 1, and I take my 521 and post it back. Then I credited cash. So I'm going to scroll back up to my cash account. These do go in numerical order. Okay, so assets are always first, so I don't have to put the month again, I just put the second. I credited for $750, so keep in mind this is my cash account. Credits decrease, so I take my previous balance of $12,000 minus my credit of $750, and my new cash balance is $11,250. Okay, it came from J1 for my post reference, and I take my 101 and place it back over in my post reference column of my journal. Okay, I'm going to skip down. You go in order, but I want to skip down and show you the cash again. So on the 5th, I debited cash for 101. So I go to my cash account, I put in the 5th, debit for $950, cash increases with a debit. So now when I get my new balance, I'll take my $11,250 plus my $950, and now my cash balance is $12,200. So you can see as the process goes how your cash account looks. You'll never have a credit balance. Every single one of these accounts balance should always be on their normal balance side. So this is where it becomes very important that you memorize the normal balance and how the accounts increase. Okay, for example, consulting fees has a normal credit balance. You're never going to see a balance in the debit side.